The Bank of Japan is now talking about potential emergency rate cuts between meetings. And while the US economy and the Canadian economy tend to work hand in hand, side by side, and I think it's kind of ignorant to suggest that Canada is going to see all this weakness from tariffs, but the US is going to be just fine. And while I think we're going to have a bounce in the near term, I think markets could probably bounce further from here. Yes, it wasn't a great looking bounce. After falling 10%, you would want to see a much stronger bounce. It was also a bounce on lower volume. That's not normally a great sign. You could continue to move higher for a couple of days. But ultimately, this is not the dip that I want to be buying. And here in this video, I will explain just that, why I'm still bearish on this market. But not as all bad. You did see the MTUM, the momentum ETF, was up about 1.5% today. The XLP consumer staple ETF was down about 2.1%. So people are rotating back into growth. They're rotating back into momentum. Short term, I think that is a positive sign. But where I'm more concerned is really over the next couple of months, not the next couple of days. And this is something I shared on X. Bank of Canada's Governor McCallum, I don't know if I'm saying that right, said, quote, "I am not ruling out an unscheduled rate move if something severe happens suddenly." He's essentially saying the Bank of Canada is prepared to do an emergency rate cut if something unforeseen happens. That is not commentary that you hear all the time. And what raises alarm bells for me when I hear that is the correlation that historically is with the Canadian economy and the US economy. So the green dots here are the unemployment rate for people 15 years and older in Canada. It's consistently higher than the US. It's pretty much always been that way, at least in recent times. But you've never really had an instance where the two diverged. They really follow each other. Just Canada's a little bit more amplified. And to some extent, Canada's, unemployment rate can rise a little bit faster than the US or fall a little bit slower for that instance. Well, Canada's unemployment rate has been rising really ever since 2023. It's been kind of slow and steadily going higher. The most recent report came in at 6.9% unemployment, 6.7% unemployment, around that area. Now, the US unemployment rate has kind of stalled out a little bit. It's fallen a little bit, and now it's starting to rise up again. In the latest BLS report, the unemployment rate went to 4.1%. Previously, it was at 4%. I believe the highest we were at was, 4.3% or so? 4.2% technically. So it's alarming seeing things go this way. And it's predicted that Canada will enter a recession this year. Where I see the risk is nobody's really expecting a US recession. That's really not in the cards right now. And I hear a lot of people, hedge fund, Wall Street guys, that say, I don't see a recession. That's right. Me either. I don't see a recession at this very moment. But the reason stocks have been selling off is, what about 2, 3, 4, 5, 6 months from now? What are the policies today doing to economic activity in the future? And that's where it's really hard to deny things are going to get worse before they get better. I mean, besides the fact Trump, the press secretary, Scott Bessent, basically everyone in the Trump administration has already told you prepare for a recession, or quote unquote, as they call it, detox or transition period. Like they're telling you we're going into a recession. And I think they want us to go into some kind of shallow recession to drop interest rates, to kill inflation, to get back to an economy that is, again, fueled growth from the private sector instead of the public sector. So I think that's the ultimate goal by the administration. Are they able to do that? That's the question. Do they have the power to push us into a recession? Well, the last time you had a tariff regime like this, you had a depression. So I don't think a recession is too far-fetched. And it was the Smoot-Hawley Act, the Tariff Act of 1930, that helped exacerbate the effects of the Depression. You probably would have only had a recession if not for that Tariff Act in 1930, which was repealed in 1932. By then, it was far too late. Do I think we're going to have a depression? No. Do I think we could have a recession? Yes. And stocks are not priced for that. They're just not. We're not, pricing stocks for that, and stocks are not priced for that. Now, a model from JP Morgan shows that the market implied probability of an economic downturn has climbed to 31% on Tuesday from 17% at the end of November. Yeah, that's not great. Goldman Sachs says that they have a similar model that also suggests the recession risk is edging up, now at 23% from 14% in January. And part of the problem is with, markets down 10% right now, is normally you don't bottom until everyone's bearish. Everyone is not bearish right now. Like, far from it. People are really fighting what the administration is trying to do, and that is push us into a recession. People are fighting that and, really prolonging the whole process of people turning bearish. If everyone was bearish right now, you would probably have a much stronger bounce from the lows. We did not get that today. Pretty, good indication that the lows are not in. Now, what I also find very fascinating, this is the flows per month for the QQQ in millions of dollars, okay? This goes back to January of 2022, okay? What do you notice? All these months are positive. Even when the NASDAQ was down 30% in 2022, there was only 1 month that was negative, and it was only negative $9.5 million. And that was in April of 2022. Okay? Every other month since then has been positive. Besides February 25th through March 25th. You had net outflows of $418 million. At least that's what's estimated so far. We're obviously not to March 25th. So the month-to-date totals, the last 30 days, have actually seen the first outflows really in a long time. And again, back to the unemployment rates between the U.S. and Canada, we basically went into or out of recessions at the same time. I think it's kind of ignorant to say Canada's going to have this recession and we're not going to. I think it's very easy to actually predict this in this instance. When you look at Doge, really destroying employment confidence in 2 million government employees, let alone Doge that's cutting back government spending, that's creating employment concerns with all this, companies that do business with the government. So the government has 2 million employees. There may be 5 to 10 million government employees that are seeing contracts get reduced or outright canceled that may be nervous for their jobs. Okay. I think that will start to be reflected more. And that's why we're seeing consumers slowing down right now. Okay. I think it's kind of ignorant to say that, mixed with obviously the trade war creating more uncertainties and what just dollar amount what the trade war is going to do. With volatility in government policies, people are not investing right now. IBM CEO said yesterday that the tariff uncertainty is really making people pause their investments. Pausing investments is not good. And I'm sure that's going to lead to layoffs, and especially layoffs through attrition, right? When people quit their job or leave their job, it's going to be a lot harder to find a new job, but those companies are not going to rehire to fill that position nearly as fast. That is what layoffs through attrition means. So, when I look at these two economies, the U.S. and Canada, and I think about the dynamics that are happening in the U.S., I think it's going to be very difficult to avoid a recession. I don't think Trump's going to back down anytime soon. If that happens, great. Then that obviously lowers the recession risk. You can also see something I talked about in the last video. This is trueflation. Now, what is inflation at its core principle? Okay, you could say it's money printing, you could say it's XYZ, but it's really demand, okay? If there is demand for a product, you can have inflation. If demand slows down for a product, you cannot have inflation. Simple as that. Why? Because the economy does not work if people do not buy things. Okay, so imagine it like this. Imagine if I'm selling, water, for an example, and I'm charging $5 a water. And my break even in the factory is I have to sell 10 water bottles a month to just break even, okay? Well, if I'm charging $5 and I'm selling 8 water bottles or 7 water bottles, I'm not breaking even. I have to lower prices. I have to bring that water bottle down to, let's say, $3. And then I'm selling 12 water bottles a month. Great. Maybe I have some room to raise prices. But if demand does not keep up with where prices are, if demand starts to fall, companies lower prices so they can break even and make a profit. Because if you obviously cannot run your factory at full capacity, 9 times out of 10, your business will not be profitable from a manufacturing or producing, side of things. So at its basic principle, inflation is a product of demand. It's obviously a product of other things as well. But if there's not demand at a price point, prices will come down. Because if people are just simply not buying, then you're not selling. And in that case, the economy halts to essentially a stop, right? So the drop in trueflation, yes, has a lot to do with energy. It has to do with other things as well. But the trueflation index absolutely cratered from 2.33% down to 1.32%. This is updated daily on millions of products that are included in the BLS inflation report. Okay, so that's why this tends to be a leading indicator, because it's updated so frequently. It essentially follows, to the most part, the path of inflation. This is telling you that the economy is slowing down. Okay? Kind of like China's. In deflation, look at China's GDP. Maybe it's on a different chart. Look at China's GDP compared to, other developed nations like the US here in green. Look at China. It's done nothing, essentially, since 2021. 2021, China's GDP was 17.82 trillion. Today, it's 17.79 trillion. 2 years, 3 years, 4 years later. And this is only updated from 2023, right? So it's going to be a little bit higher. It's going to look a little different. But essentially, China experienced deflation and essentially no growth in the economy. China's really what seems like been in a recession. Or look at something like this. In February 2025, France's inflation dropped to 0.9% year over year, the lowest level in 4 years, due to a sharp fall in energy prices and a slowdown in service, manufactured goods, and tobacco prices. But I seen a headline today. France's GDP for Q1 is almost negative. It's expected to be between 0.1% and 0.2% positive. Like, not good at all. Flirting with a recession. The bottom line principle of this is if we do see inflation plummet over the next month or two, the economy is going to look like it's plummeting as well. Recession fears are going to grow, and you are going to see stocks continue to be under pressure. And again, I think there's a lot of bulls still out there. People really don't want to believe that this is the start of what could be a recessionary dynamic. You can see the VIX as of recently. Well, today it fell, okay? It was down about 10%, which is not really encouraging if you're thinking this is the start of a new larger rally. Normally, you want to see the VIX like absolutely implode, right? It usually goes straight up and it goes straight down. People get fearful really fast and then they all get bullish at the same time. That didn't really happen today. The VIX is still overall pretty elevated at 24.23. But what's interesting about this is even though the VIX is elevated, positioning is not nearly as bearish as the VIX suggests, okay? And normally it's when, people are bearish, like the AI investor sentiment survey shows people are bearish right now, that's for sure. But their money is not necessarily positioned in a ton of shorts. Again, kind of as we've talked about here throughout this video, unless something changes, unless the trade war changes or, something big like that, there's not much to be super optimistic about, okay? I don't think the trade war is going to end. I mean, I think that Trump would look real bad if he just said, oh yeah, all tariffs are off. Like, that's not a good look. I don't think that's going to happen. So all things equal, if we just continue on this path, we will find ourselves in a recession. And at this point, we're not priced for that. And the way I'm really looking at markets here is, sure, if we went back to new all-time highs, you're going to miss 10% in the index. Let's say we bounce back to 6,000. You're going to miss 7.4% or so in the index. But the potential risk here is massive. I mean, if we actually went into a recession, you're looking at 2022 levels. You're looking at anywhere from 30 to 40% lower from here. Like 40 to 50% bottom to top move. The downside could be, in my opinion, 3 to 5 times larger than the potential upside at this point. Again, all else equal. Again, if nothing changes. If nothing changes, I don't see the upside as, much more than 7-ish% from here, getting back to about 6,000 on the SPY. And if nothing changes, you're gonna go into a recession at some point this year, most likely. Or even if you don't, I think you're really gonna underwhelm economic expectations. And what we've seen from a lot of companies so far is lowering estimates for full year earnings. So I think even from an earnings perspective, you have some downside pressure on markets, and then especially from inflation and tariffs, and if companies are able to pass that on or not. I don't think they will be able to, and that is margin destructive. So I really don't like the upside versus how much downside you could get. And as the markets bounce, as you get close to that 200-day moving average, you want to see if you kind of break that and move higher. I think that's the first level to start looking at some shorts again. So let me know what you guys think about this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.